to our job of forecasting the overall public finances.
Again, we've got the Chancellor tomorrow, so and then I think last question goes to Danny.
Yeah. Appreciate it. It's been a long session, and very much appreciate your patience and time. On page 19 of your outlook, you talk about mortgage rates and the effect on real household disposable income. I'm just concerned that you make the point that impact of higher interest rates on mortgages will be offset by increases in saving rates, even though you think the saving rates are going to decline, I think, with the implication that it's a sort of net neutral effect. But I mean, you also do acknowledge that the change will be unevenly distributed, which indeed you would expect. We're talking about people with mortgages having to pay higher mortgages, other people with savings benefiting. So there might be some net neutral effect in theory, but in practice we've got people with very high mortgage rates to pay. Are you not concerned about the risk of a mortgage crisis given rising rates?
I mean, you're absolutely right. It's very unequal, and most of the savings are disproportionately owned by people who've got higher incomes, probably older, lower mortgages relative to their resources, and younger people will have very little savings and might have a large mortgage relative to their income. And we do factor some of the implications of that for consumption by essentially assuming that the negative hit to people who've got a big mortgage has a bigger downward effect on their consumption than the positive effect on somebody who's got the savings. Is there the potential for real problems in the housing market and large numbers of people falling behind with a mortgage? I'm afraid that potential obviously is there, and there is certainly a risk about that. We use the swap rates to try and work out where the average interest rate is going to go on the stock of mortgages. It goes up for a while. It's slow though, because as you'll know, the predominantly mortgages in the UK now become fixed rate mortgages, so it doesn't feed through to most people's mortgage higher interest rates until they remortgage. So it's kind of a slow and gradual increase in the average interest rate on mortgage stock, but for any individual household, it's a big shock probably at the time in which their fixed rate deal runs out. The Bank of England and the Financial Conduct Authority, I should say, have had rules in now, which I'm sure you're very well aware of, for some years now, which say that mortgage lenders have to assess whether or not when they make a new mortgage loan, people could live with a sudden 3% increase in the mortgage rate. And those rules have been there for, several years now. I mean, at least 7 or 8 years, is my recollection. So the majority of large mortgages relative to people's incomes, which have been taken out in the last 7 or so years, in principle, the mortgage lenders have had to assess whether people could live with a sudden 3% increase in interest rates. That 7% increase in interest rates on the mortgage is coming for a very large proportion of people. One hopes that the banks and the building societies had taken pretty seriously what was the new rules of the game and judged whether people could live with a 3% increase. Is there a risk that large numbers of people can't? Yes, I think there is a risk.
Thank you very much.